Hey Internet, it's RJ. Welcome back. Thanks for tuning into the show today. Now today's episode, I'm taping this in the wintertime, but spring's right around the corner, and that's generally when folks head out to look for houses, go home shopping, get mortgage applications, all that fun stuff. But as credit card warriors out there probably watching this show, how do credit cards play a role in your mortgage process? So that's what we're going to cover today. We'll talk about why folks say do it, don't do it, and of course, what I've actually done historically as well, which would be the fun parts. Of course, if that sounds interesting to you, go ahead, press the subscribe button, and let's get to work. Now, again, the spirit of this question comes from, probably mortgage bankers, loan officers, whatever you want to call them, who generally tell folks, hey, once you're in process, which means like you have a mortgage application, you're working through getting, the home approved and everything, don't apply for anything while you're doing that. In that part, we can answer right up front. That is true. You should probably not do that. We'll give you a story later on, but that part is true. But then it gets farther and farther out. Some people say, hey, 6 months before you apply for a mortgage application, maybe don't apply for credit cards. Like, is that true? Hey, don't use your credit card when you're getting a mortgage. Is that true, right? So you hear all sorts of things, right? So let's start at the beginning. And, when you talk about a mortgage, it's kind of, I would say, as someone who's worked in mortgage banking on a mortgage desk for 10 years, give or take, it's like the big leagues of personal banking from the standpoint, if you think about other products, credit card works off of one credit pool and stated income. Stated income means they're not verifying your income. You're just telling them, sure, there's calculations on the back and they can still infer things from your credit report. But again, stated income, you're instantly approved more often than not by a computer algorithm. Great. Auto loan, again, same thing. You can have an auto loan drawn up by the time you get back from the test drive with the finance manager at the dealership. You're not really providing that many documents for it, so again, pretty easy, pretty low stakes, even given that, it may vary dealership to dealership, sure, but, you get my point. Last time I bought a car from Cadillac, it was pretty easy, no big deal, no money down, nothing in a few minutes. But mortgage, again, as you may know or may not know if you're going to be a first-time home buyer, they're pretty thorough. They're verifying your income, which means you provide W-2 statements, you provide a check stub, you provide tax returns. They're doing a credit pull, it's called a tri-merge credit pull because they pull from all three agencies, TransUnion, Equifax, and Experian. Why? Because, issuers are not required to report to the credit bureaus. So it's entirely possible that one shows up on TransUnion but not on Equifax, so they pull all three. Don't worry, you're nice enough to pay for that. You'll see a line item at closing for, your credit pull as well. So that's the first piece. And as we know, applying for a credit card is a credit inquiry. So there will be potentially some impact to your credit. They will show a new line, a new trade line being open is what they call it. You'll have an credit inquiry. New credit, I think, is 10% of your overall FICO if we bring in our FICO wheel option. So not the biggest piece, but it will impact it, to a degree. So these are all kind of like the reason why. It's really the bank trying to just protect themselves. And as we've said before, applying for a new credit card, there's no context involved with credit card applications. So a bank can look at it and be like, oh my gosh, they asked me for money, now they're asking other people for money. That's more risk, and it's either going to make it more expensive or it's going to, freak them out a little bit. So let's move into that part. Why? Where does it come from? Well, you have bankers of all different caliber these days. You have bankers that simply enter in your information to the computer, and the computer spits out your options, and there you go. Then you have bankers who know how it actually works, know what your qualifying options are, and they can, finesse things and help you out. When I say finesse, I mean they know in their head, well, if I can get you to get this much more money, maybe I can get you to here, move you to this product, that product. It's all above board, but there's different caliber of bankers. But across the board, it's much easier to have a client sitting in front of you, and instead of trying to explain all this, which is going to be like a 10-minute video, 15-minute video, just tell them, hey, just don't apply for anything. And that part is true because, again, once you're in process, like any little thing, could impact that application because you don't really know, back to our bankers maybe not knowing all the details, you never really know how on the edge you are of a specific interest rate or qualifying for a specific product. Now, if you're in the 800s, 750s, 800s, you're probably fine. But, even if you're 720, like, you could be close, and one credit ding could push you down underneath the requirements. They're not necessarily going to share with you the requirements of each product. And if that happens, that could mess things up, because if you drop, a little bit and you no longer qualify for a 5% interest rate, now it's, 5.5. Well, that does impact your purchase price, because, again, part of your mortgage payment is based on paying back the interest. So if more money has to go to interest payment, then there's less money that can go, overall to like the purchase price, so to speak, right? So that could definitely happen. And again, you're just not going to really know where you're at in process, and that's really the main concern. It's just easier to tell people, hey, just don't move, just sit still for like 30 days or something. So the next question is, how would they know? Well, because to that 30-day point, mortgages, a car loan, as we said, done in an afternoon. A credit card can be done in 10 minutes. But a mortgage is usually 30 to 45 days. Your contract is usually going to give you 30 days to close. They know that, and that's a long time to leave yourself exposed as a bank. So they have credit monitoring that they add in on everyone's application. But don't worry, just like the credit report, you're nice enough to pay for it, and it does exactly what it says it does. It monitors your credit for any activity as you move through the process. So if you were to apply for something else, well, then it's going to trigger that. And again, banks see that as potentially either more risk, from the standpoint of, hey, because there's no context with the credit card applications. It's like, why is he applying for something else? He's asking for more money over here after he just asked us for $200,000-$400,000. What's going on? Obviously, there's a simpler answer. You probably just wanted the rewards, but it just kind of how it works. And risk means more expensive, again, in mortgage banking or in banking in general, which means they could either say, hey, it's now more risky, we want to move your rate up, which is how they price in risk, or it could, knock you out of process in like the worst case scenario, or, have to redo a lot of stuff. So again, it's just easier to just tell people to not apply. And that part, again, as I said in the beginning, I would say is true. Once you're in process, I would not apply for anything else. And I would say in process starts from like the time you have like an accepted offer, because you're not going to have a full mortgage application until you have like an accepted offer. So you could go and you could get pre-approved or fully approved, where they've actually verified your income and all that stuff, and done partial the underwriting of you. That's fine. You still don't have a mortgage application yet, because they're not going to start you a full application until you actually have an accepted offer. So there's that. Now the other piece here is, should you use your credit cards while you're in process? Again, historically, it's been easier just to tell people no. And it's easier to tell people no because, again, as I look at the timer, we're 7.5 minutes into this, and probably have another 5 minutes ahead of us. I hope you're having a great time, by the way. But because it's easier just to tell people not to do it, because the crazy things you'll see is someone's very excited to buy a new house, and maybe they go out and they buy a bunch of new appliances. Which, by the way, is an aside. You should never be buying things for your new house until you actually close. It's just bad luck in the business. Just don't do it. So, but people could get excited. You could easily, maybe go all Viking appliances. You could easily drop 10 grand. And if your credit card statement closes, that 10 grand is going to report, that credit monitoring is going to pick it up, and it's going to say, oh no, you have a $10,000 liability now. And that could definitely impact your purchase price. Why? Because approval processes, again, FICO scores are kind of like, yes, we will approve you. That's the decision for if I'll approve you or not. But then your purchase power is a function of debt to income. How much do you make versus how much has to go out the door every month? And it's like the documented liabilities, right? So a car payment or a credit card payment, stuff that's going to show up on your credit report that we know you have to account for. So all of a sudden, in their eyes, like, you are, even if you have the money and you were going to pay it off the next day as soon as the bill comes, they've seen the $10,000, and then they're like, oh no, now you no longer qualify for this. Now, yes, it can be fixed, because you could turn around and give them your paid off statement as documentation. They could say, okay, stand down, red alert. But again, then you also have people, well, now you had $10,000 that you just paid for this credit card. Does that affect your down payment, which is another big component of how much house can you afford? And so they might start asking more questions like, well, show me where that 10 grand came from. Did it come from here? Can you still afford it? That whole thing, which is Going to be problematic to say the least. Again, you can get your way out of it, but it's going to be annoying. So again, it's much easier just to tell people not to do it. So the last part of this, I think, is like, when should you stop applying? Well, there's two more parts. This part than what I actually just recently did. So when should you stop applying for credit cards? Well, again, if you're borderline, like, you're struggling to get approvals, you're down in the low sevens, something like that, and you need every bit that you can get, then you probably should stop applying for stuff sooner rather than later. I don't know that there's a specific amount of time. I think credit inquiries stay on your account for 2 years, but they only impact your credit for 1 year, so you can go back and kind of use one of your credit monitorings and see, maybe how long it's going to take for some to fall off. That could be a way to look at it, but that's kind of why they say it, just to help you, put you in the best position possible. Again, if you're in the 750s and the 800s, I think you're fine. You're going to know your situation best. But again, a lot of this stuff is sales, and sales, they want to make things easy for people, as easy as possible, especially something as daunting as a mortgage process. And this is just an easier way to do it without having to explain a whole lot of things. So the last part, what did I do? Well, Chase Credit Journey says I think I have like 20 inquiries. They're not all credit cards, but they're definitely inquiries from credit cards or bank accounts that had card pulls and things like that. And that didn't slow me down. I put in an application. I was pre-approved for like $400,000. And then once they did the full underwrite, I ended up approved for like $390. So I did that part. Also, it's fun. This is a new piece for me, but when you apply now, you'll get a screen or they'll ask you like, hey, we noticed that you applied for these 3 accounts. Or for me, it was like 3 accounts. Recently, what are the account numbers? Do they have a balance? And did you go through with them? And what they're doing there is saying, we know that, so I guess I'll back up. I was applying for a Wells Fargo Active Cash and a Capital One card, and I got denied for both of them. But the bank knows that sometimes it takes a while for the card issuer to actually report that to the credit agencies, but they can still see the inquiry. So what they were doing, the bank was doing, was saying, hey, we can see these are inquiries. Well, we need you to document yes or no. Did you do these? Are there any balances? Things like that, because they may not have reported to the credit bureaus yet to cover us. How would they know if you're lying? Well, in that scenario, they really wouldn't. They could, if you marked yes, they could ask for statements then. They probably would. Now, I was denied for both of these cards. So if you said yes, I imagine you'd get another inquiry for show me paid off statements. But again, they just want you to document it so that if it comes back later and it's not true, they can just dig up the paper and point at you and say, no, you lied to us, your fault, you're to blame, not us. So that is new as well. So they can tell, and again, they're trying to protect themselves fully. I hadn't seen that the last 2 times I'd applied. Last 3 times, actually, I'd applied for mortgages. So there's that. So I did, back to our story, so I did the full pre-approval process where they underwrite you and everything, so it's like a verified approval letter. And then in between that and before I got the application, you submitted the offer, I actually applied for a Bank of America credit card, and nothing happened. Should I have done that? No, probably not, and I wouldn't tell anyone to do that. I just didn't want to go 30 or 45 days and wait to get this card when I knew I had some expenses coming up. I thought I'd be fine doing it. So yes, I applied, because they don't put in the credit monitoring stuff again until you're in process, offer accepted, moving down the process. Now that I'm in process, I would not apply for anything else. It is driving me crazy, but I wouldn't until the day I closed. So again, with all the inquiries that I have, I don't remember the FICO they put on there. I'll put it up for you so you can see it when you just be transparent. But after that, I wouldn't apply for anything else. Again, I shouldn't have done the Bank of America card, but there are expenses in the mortgage process that you can use a credit card for. That's a topic for another day. You can let me know if you want to see that maybe. But again, I wouldn't advise anyone to do that. So we talked a lot here. So we summed it up. It's basically a function of risk and understanding, where customers are at, right? And as a salesperson, it's just easier to say, hey, flat out, just don't use your card. Why chance it? For a lot of people, this is the biggest purchase they're going to make. I'm a little bit different in the standpoint of I do rentals. Again, not a lot. We're talking about this would be my 3rd house, right? So it's not like a real estate empire here or anything, but you get more used to it, plus you've worked in it. So I'd say I'm a little bit different. Again, I still shouldn't have done the card. I just kind of wanted to. But that's why they tell people not to do it. So it's partly, in my opinion, looking at your own situation and seeing how that tracks and then what lines up for you. But again, that's why they're going to tell you not to use your card. So what can you do? I mean, well, I think you can get your cards in advance, just be prepared to actually answer those questions of like, hey, did you apply for this? Yes or no? And if you want to use your cards, again, I would simply pay them off before the bill comes due. I wouldn't make a bunch of different payments on them because that's going to freak out the card issuer. But if your statement closes at the end of the month, well, then a few days before it closes, just make the payment and you're good to go. It will report zero. You could also use business credit cards because business credit cards don't report to personal credit as long as you keep making the payment. So that could be done as well. Of course, a banker isn't going to sit there and talk to you about using business cards or anything like that. So we know there are some tricks. As long as you keep doing that, you're fine. And again, even if it closes with a small balance, $30, I think my US bank card just closed with $30 on it. That's fine. No one at the bank is losing their mind over $30. It's really, as we use that example, of like people just, buying large appliances and putting them on the card and things like that, for example. So overall, that is kind of my thoughts on using credit cards during mortgage process. Long story short, probably don't do it, but you'd probably be okay if you do. Maybe the answer is do as I say, not as I do. It's probably it. Anyways, guys, that's going to do it for this one. Of course, if you liked it, drop me a thumbs up down below. If you found it particularly interesting, consider subscribing to the channel as we're posting content just like this every single week. Of course, right back every Sunday with all the news you can use in the week that was in credit and finance. And of course, every single day over on profitablecontent.com, the channel's blog. We not only have the latest news stories, we have bank promotions, which will be great to hunt bank promotions while you're going through the mortgage process because those are safe. And if you want to live life on the edge, of course, we have credit card offers as well. Anyways, guys, that's going to do it for this one. As always, thank you so much for watching. We'll talk to you very soon in the next one.